What's up guys, today I'm gonna show you how to read a balance sheet. So for starters, go into Yahoo Finance and find your stock. For my example, I'm gonna be using Apple. When we get into the Apple stock, we're greeted by this lovely page here, which we are not gonna be using. So let's go into the financial on the left side and scroll down until we see this lovely drop-down menu right here. Here you can see that you can find the annual sheet in annual form or quarterly form, depending on your preference. If we scroll a little bit up, we can see that there's 3 menus, and if we click on the balance sheet menu, we are greeted with a lovely drop-down menu right here where we can see all the numbers and all the cash that Apple has. Now by clicking on the arrow, we are greeted with a drop-down menu, and here we can see that Apple has a lot of money in its business. Its total assets is around $300 billion. You might be wondering why I'm saying billion dollars, and that is just because in this spreadsheet the numbers are counted in thousands. So you have to remember 1 million here is the same as $1 billion. So here we can see Apple's total assets, but if we click on the arrow right here, we can see a drop-down menu with the current assets and the total non-current assets. Now the total assets in simple term is just all within Apple that can be traded for money, or that can be liquefied within a year. Within total assets, we have the current assets, and within the current assets, we have the cash equivalents, receivables, inventory, and other current assets. Going over it one by one, cash and cash equivalents is just what Apple has. Receivables is what money that is owed to Apple, so that is people that is in debt to Apple. Inventory is the amount of stuff that Apple owns, of course in dollars, so it is the value of the stuff that Apple owns. And then lastly, other current assets is just the rest, oversimplified of course. And then we come to the total non-current assets, which is Apple's long-term investments. So under that we have the TPE, and that is just tangible long-term assets. So say equipment or machinery that Apple owns. And under that we have the accumulated depreciation, which is a fancy word of saying how much value the equipment or machinery has lost. Liabilities are what the company owes, or the amount of money the company has to pay. Under liabilities, we have current liabilities. That is just what is to be paid within the year. We have a lot of tabs under current liabilities, but simplified, they are just assets that Apple needs to pay within the 12 months. So adding them all up gives us a number that Apple has to pay within 12 months. Next, we have the non-current liabilities. Again, same as before, they are not to be expected to be paid within the 12 months, but is still liability. Now that all the important stuff is out of the way, I will, for everyone's sake watching, make the rest of the video a bit easier. To start with, we have the total capitalization, and that is just the total money a company has raised to finance its operations. So it's the equity plus the debt. Then we have the common stock equity, and the common stock equity number shows the total value of what shareholders own in the company through their common stock. Then we have capital lease obligation, and the capital lease obligations number on the balance sheet shows the total amount of money a company owes for assets it is leasing under long-term agreements. So net tangible assets represents the total physical assets a company owns. Working capital measures a company's short-term financial health and its ability to meet its day-to-day obligations. Then we have the invested capital, which represents the total amount of money that has been invested in a company by its shareholders. Next we have the tangible book value, or the TBV, which is the total value of a company's physical or tangible assets that shareholders would theoretically receive if a company were to be liquidated. Then we have the total debt, which is the gross amount of the company's borrowings without considering its cash position. Then we have the net debt, which is just the same thing as the total debt, but without the cash. Then we have the share issued, which refers to the total number of shares a stock has, or a company has sold to its shareholders. And lastly, we have the ordinary share numbers, which refers to the total number of ordinary shares, also called common shares, issued in a company. So it's just the value of the ordinary shares. And the ordinary shares is just simply better shares that allows you to vote or partake in shareholder meetings and receive dividends. The important thing to understand about this balance sheet is that all of these numbers are valued based on something. So the value of the machinery, the value of the shares, all of these are the value of the things. How do we actually look at this and say, wow, this is a good company? Well, a calculation that a lot of investors like to make is the total current assets minus its liabilities. So in our case, it would be the total assets, which is around $364 billion, divided by its total liabilities, which is around $308 billion. And that gives us a ratio of 1.18. And when investors are looking into businesses, they like this number to be above 1. So you usually want a ratio above 1, and that would be considered good. But a ratio above 2 is considered very good, because if you think about it logically, a ratio of 2 means that the company has enough assets to pay off its debt 2 times. if sales were to stop completely or anything were to happen to the business. So I should find a company above 2 and invest all my money in that company. Yes, now I will be rich. Slow down, because there's a little more to it. If you want to find out how I talk more in depth and give you more tools to figure out how you should buy or sell your stock, or when you should buy or sell your stock, check out my next video. Thank you guys for watching, and I will see you next time.